Okay, hi there guys, can you hear me? Can you hear me loud and clear? I just had my mute on, sorry about that. G'day Bobby. It's a bit of a look at where the markets are. Yep, all right, fantastic. So what we're looking at, it looks like the SPYs, we'll get stuck into it. Looks like the SPYs actually opened up a bit stronger, so we'll take a look at that first. Here we go. So we're expecting, this was a close, so we closed, 4 o'clock was sitting around 64.38, thereabouts. Sorry, Dave. Hope you don't watch this later on, mate. I just muted you. Anyway, so we're sitting around 64.38 on the close at 4 p.m. and rallied to finish around 68. So we rallied about 30 points. So we're expecting basically the ASX to open 30 points by the time it hits 10 past 10. The thing is, the SPY's actually opened up a bit stronger. So there's one or two things. You can look at that. The market's getting a bit stretched up here. We can see that the buyers are giving a good nudge. We've got a bit of an offer zone, which not an offer zone as such, because it's not confirmed high just yet. It's just a high from, what was that, previous action around the 20th, so a couple of days ago. High at 65.01, so that could provide some sort of resistance or a selling zone up there. If sellers are willing to jump in now, I'd suspect that this is a bit of a washout on the open. Have to wait and see. Happened the previous day. We had a downtrend. That wasn't yesterday, was it? No. I'm on the 5-minute chart, so that should have been. Just looking at the open. No, it's not. So the open was up here yesterday. Oh, yesterday's open. There we go. So this was what we were looking at yesterday. The market pressed down. So we gave up the gains from the previous session, pressed down, found support. So we found that bit of a bid zone, which we mentioned around 64.24, which was good. Provided some support. So I'll go through the trades in a minute. But that was the open. You can see it does wash out to the top side. So if it's in a downtrend, they can tend to wash out on the open, chop around a bit. And that's just to clean out some overnight positions that are either long or short. Scare them both sides of the market where they might be forced to lock in or squeezed out, trigger some stops out, basically clean the slate for the day, and then obviously proceeded to head south. We had a couple of longs. Well, I was trading it yesterday. A couple of longs got stopped out twice. And then the second time, or the third time, was a bigger position and made some points back. So ended up a profitable day, but not really good trading all in all. And there's a couple of missed opportunities, which I'll show you soon. So today, the market's actually rising. You can see pressure's been up. We've got a bid zone around 64.53 that we can see. That was built up overnight, pressed down. That was probably about, was it just in early hours of the morning? So it first touched down there just after the open on the US, and then pretty much was range bound most of the session between the highs and the lows. The highs at 64.73. So just be wary. Anyone that's been shorting it basically through the US session, that's why the market creeps up. They'll be, if they're just going, okay, I'm going to plant my stops above the previous high, that's why you get these sort of washouts on the open. And they clear that, especially if it's trading up towards the zone. They're more than likely, most times, 9 times out of 10, will clean that zone out. And then from there, you might get a bit of a whip lower. Who knows just yet? I'd expect until the market's finished open at 10 past 10, until the ASX picks some sort of direction, this market could be choppy both ways. And it has been the last few sessions, so we'll keep an eye on that. Otherwise, if it's going to be bullish and continuous bullish sentiment, we could be looking up to 65.01 or so. Test those highs and then see what happens. But just don't forget, it is extended both on the 30-minute chart, so slightly longer term. We're not talking days and weeks, but we're talking 30 minutes. So intraday trading, that's fairly long-term time frame. It is getting a bit extended up here. So for the bulls to keep the momentum going, they have to put in a big effort, and all the sellers just step aside to see what happens, because we're sort of in a no man's zone, whatever you call it. No trading zone. We've got a high here, which proves just been cleaned out. So really the next targets are up to the previous lower highs. And you would suspect if it's going to get up to, say, 64.94, it's going to trade a bit higher and really probably clean out the 65.01 highs, wash it out, and then see what happens from there. But it all comes down to what happens, from the start and what sort of happens on the ASX. So we'll take a look at the ASX just on this open. We'll look at the intraday charts on that. Start off with a 30-minute. So the 30-minute's been down, and we've been bouncing back the last few days. Big down day yesterday. So you expect that from the close at 4 o'clock. We'll just go down to the shorter term. What was that? That was a close at 10 past 4. So what do we close at? 64.83 plus 30, 20, 65.20 mark. So potentially up towards, well, pretty much the highs from yesterday. Wouldn't be surprised if we do, open up 30 to 40 and at least test the highs from the previous day, which is up towards that 65.50 mark. The bulls will be out, the bargain hunters will be out. So it'll be interesting to see how it goes. It is a very whippy market. You get getting smacked down here, bounces a bit, smack down, and then comes back up, smack down yesterday on the open, and pretty much we're expecting down 40 yesterday, ended up down 60 something points. So it extended the losses on the downside. We could pop back up. So it'd be interesting to see if the ASX itself gets capped. It might even get capped a bit on the open. We're 5 past 10. We're only up 12 points at the moment. So I wouldn't be surprised if it's up 30 or so. I think the bulls would be a bit tentative just at this stage because the US has bounced back quite strong. Be interesting to see if we're capped at that 65.50 or we hold a lower high. If we hold a lower high and edge lower, especially into today and tomorrow, we've got Jackson Hole, don't forget, on Friday night. So that's Powell's speech is Friday night. And that's going to be what they're looking at to see whether he's, bearish on the economy and interest rates or bullish. Numbers come out last night. Some, what is it called? Oh, I forget the word now, but data came out last night was a bit more positive than they thought, and it's provided some support. So was it target and what's that word? I'm always forgetting that word now. Not saying producers is stuck in my head, but anyway, buyers of goods, whatever that industry, retailers, that's it, did quite well. So there's some retail data that come out, which is quite positive. So the main thing they'll be looking at, as long as jobs don't move, the labour force or labour market data doesn't change to the negative, as in losing jobs, they keep putting on a few jobs. I wouldn't expect the Fed Reserve to be too bearish because the last cut, potentially there's one more cut factor. Well, there is one more cut factored in, but potentially next month there's another cut. I wouldn't expect them to be too bearish going forward because the labour data is still quite solid, quite strong. And that's what they're focused on. They're not just going to cut rates, no matter what Trump says, cut rates for the hell of it, just to help him out with his 2020 elections. So it's going to be interesting to see how this market takes it. If they turn out Friday night and he's very bearish on rates and the economy, then that would signal tax cuts and that would signal probably some support in the equity market. But again, there's only going to be support for so long. And this is all my ramblings anyway, support for so long because you can only cut rates so far before it becomes pointless. You just can't go into negative rates. I mean, Europe are there now. How far can they cut them before it becomes a waste of time? Banks ain't going to cut their rates. They're not going to, take your money and give you money in return. They're in the business of making money, not giving it away. So, governments can keep cutting rates to the point where I don't know all the systematic behind it, all the numbers and crunching behind it, what bonds and all that. But and don't forget, cutting rates inverts the yields, which potentially could bring on a recession. So it's all these things, factors. It's times for a choppy market. That's probably what I'm best thing to say. So let's look at quickly what the Dow. That's not what I wanted. What the Dow and all that did overnight. Edging higher, and where's the close? Close was about 8 o'clock. So it hasn't really changed. The Dow hasn't really changed since the close, so no real movement to go off, suggesting that the SPY open, the strength in the SPY opens a washout, and you can see that the actual ASX is not open up 30, I don't think. The DAX around the close too, it closed a bit earlier, hasn't moved too much. It's trending up, so I suggest that this is going to provide some sort of resistance for the day anyway. So we'd be capped up there. There might be some selling in the Germany overnight session. So that's our session now. Might be just selling until they open at 4, 5 o'clock. We'll see how they go. And gold, it did pop up, found that minor double top, just around that 15.08. It's still holding on the futures above 15. This is more of a spot market, but if you look at the futures, it's about 15, 13, 14, 12, somewhere around there. So it is holding up okay. That doesn't mean that the pressure's down. You've got double top here. You've got a lower high here, a major lower high. So this is all one move, bounce back up, cleared that, providing another, potentially another lower high. So if we see this go through 1500 on this market, push through, I would say this is more of a confirmed, and I'd expect there to be some pressure down on the downside at 1488 and probably 1500 on the futures, which would lead. Well, that's not a bad sign for equities really, but for gold and gold's the gold bugs on the ASX. Just see where they're at the moment. So we're up 28 points. We're up about 30. The market's finished open. We'll see how that goes. Gold sector's still down for today, so that's not a positive sign. They're not taking. I mean, this sort of movement on gold, it's chopping between support and resistance. There's no real clear direction just yet. It's probably a good time for gold. People to take some risk off the table into gold stocks, but we'll see how long that continues for. There's going to be some bargain hunting anyway. All right, let's quickly. What I'll just go over is the moves from yesterday as a bit of a. Now, where was I? I've done it again. I forgot where it was. Was that the date? It's the 20th. So where was that? Oh, open was here. So the opportunities from yesterday, we've got, just remembering the 30-minute chart was down. This is the 5-minute. The 5-minute chart was down. So the bias is really down still until that starts to change. You put in a key high low on the 30-minute. So the trades, this was the open. You got this spike higher. So rejection of the highs. Okay. If we just get rejection of the highs here, and then the good thing is it's popped back up. So your bias is down. What you're looking for is pretty much more pressure to come in. And the pressure started coming in after the market's open about 10:30, 20 past, 25 past 10. You can see, and it's another rejection of those highs, but it's a lower high than the previous high from the open at about 10 past 10. So that led me, and again, I was just left on the offer here, which is stupid of me. I've got to stop penny pinching and actually just put in a sell stop with my risk above here and just let it go. So the idea was you get the red candle. After this green candle rejected, it finished obviously positive. The next candle finished and was negative. It finished and it rejected again. So lower high in comparison to here, and further rejection would lead me to believe there's going to be some downside. So you can at least target towards this low at 64.44. As it played out, it got smashed anyway. But if you did just target there, 56 down to 44, there's still a 12 point gain, which was quite handy on the SPY. And if you could let it run, you pretty much, well, the idea is to follow the trend down behind the last candle high. So you stop here, stop here, stop here. As you make lows, stop. Pretty much you would have been stopped out potentially in this zone at somewhere around 29. So that's a healthy, from around the 55, 56 mark, around 30, that's 26 points. That's a handy little, and that's why I was spewing that I missed that, if you were just following it down. So that was the level we were talking about yesterday, which could be targeted for the bears. As it played out, it held up quite well. It kept shooting through. It reacted quite strong. So when the market come in here, I was looking at this zone just to see what happened, and it did pop up. You look at that and go, okay, that stopped out. Now, what should I be doing? Potentially going long. Look for some long opportunities, but it's going to be tough. Remember, trading against the overall trend, the 5 and the 30-minute trend, is always going to be tough if you're intraday trading. It's the same goes for your shares. If you're trading shares, it's easier. Well, shares are biased up. They're always biased up. You've got some solid fundamentals. They're going to be biased up because they're built that way. And the ASX technically is built that way, but they get these lot bigger swings because it's a margin product as well. But you still don't want to be, if the trend is down the daily and the weekly on a stock, you shouldn't just dive in because you think it's cheap. It's because it's near support. You want confirmation, ideally like something like this. It's provided support. You can see these reactions. Initial reaction up. Okay, that's great. Second time land, you've essentially got a double bottom. So this was the next opportunity when I started buying in here and just got chopped out a few times in here. Got the little lift, took it off, and that was enough to make back plus a small gain. But then it come back down again. So you can see even it's traded 1, 2, 3. So the bears were still strong at that stage. You've got to pop up, and that's your first real correction. That's your high, straight back down. So if this was holding up here, you could have gone long for a potential squeeze through that high. But instead it comes straight back down and retested the low. So all bets are off, then you have to reassess. And that's what we're doing. And then you watch these candles it's getting rejected. It's kept getting pushed into support, but it was getting soaked up. So the buyers were happy to soak it up here at a slightly higher level. If we just look slightly higher level, so you've got sort of divergence here, if you want to call it, at support. So this support is coming into play. So the longer that support starts to hold, the more chance that sellers into there are going to give up and are going to, the pressure will ease from the sellers, and that's what you're looking for. But again, this kind of action is a lot tougher to trade on the long side than it is, trading something like that with the trend on the open. But you've got to be quite you've got to know, I guess, what you're doing and really see those setups play out and really take your chance. Know exactly where your risk is probably the most important thing. And the same when you're going long, especially when you're going long, I guess, against the trend, looking off support, know exactly where your risk is. So you're not going to risk it. You're not going to risk this turning into a lower high and smashing through support, because that can happen a lot. It bounces off, you get that initial reaction, straight back down in. So the sellers are still in control. Sellers are still in control, even up to about here. You can see it smash back down. So there was still some selling in there. It was starting to lift, but it was a real struggle to push up. Then bang, straight back down into that support zone again. Then it started chopping around in here, and then the buyers started taking control. You'd probably see after a third time this holding up. Buyers are gaining more confidence and probably adding to some positions down here. If you bought it off, adding potentially into the close. And then it closed. It actually did lift, but it closed. It eased off into the close. It was at 4 o'clock. Did lift after that. So this zone really is what you're looking for. You've got your high low coming into play, your key high low after it's cleared out this high. Unfortunately, that was after the close. It did lift after the close, was it? No, yeah, 10 past 5. So when it opened at the night session, bang, up we go. So yeah, that's what you'd be looking for longer term when you're looking for trades off support, especially into your shares, because your shares don't have the overnight session, which they can trade overnight. And if you're intraday trading during the day, you have to sort of leave it aside. But yeah, that was the action from the trades that I found that I was watching yesterday. Essentially this one, and I was looking for longs. Once I missed that, always just trying to see what's happening around the key levels of support. And this was a key level. You can see it's traded there 1, 2, 3, and it's come back down into a fourth time. So of course, the fourth time you're going to be looking at that as a bit of a supply zone of buyers, and where sellers are going to start to think twice about pushing price through, where they expect to see what sort of reaction the buyer is going to take. If there's no buying, bang, that'll go straight through. If there is buying reaction, which you got that initial reaction up, then you're going to be starting to think twice as a seller. If you're in profit, what are you going to do? And secondly, if you're not in, are you going to be looking for longs off that level? And that's what essentially happened off that level up and pretty much from the start of the overnight session that really kicked on. So action at the moment, what are we on the ASX down? Up 26. So it's up about that 30 points. We're about where we closed overnight, just below that on the SPY. So relatively flat opening, you could say, on the ASX, but it'd be keen to see if we can hold getting overcooked on the downside here, where the buyers can step in, hold a higher low, and start to lift it back into that 65, whether we get a good bullish move today. All right, guys, probably call it a day there. Any questions, feel free to send us an email, support@tradesetup.com.au. And thanks for joining me. And tomorrow, I'm going to try to do the morning tomorrow, but I'll try to get it a bit earlier so we can watch the open and just talk through the open and where we're at play for tomorrow. Let's just look at before we go. It's not what I want. No, this one. So your 30 points, we'll just see what happens from here. It is a bit extended. So there is potential that today we get the market starting to hold a key higher, lower high, on the 30 minute. Or, we could pop up, all depending on what, I guess, the overall, could easily be a higher low, but that's only confirmed when you get up to 65.50. Once we get to 60, that's a higher low, and then pretty much that market's bullish, and you would expect that leg up is going to be the secondary leg up, going to take us up to 66 and maybe washing out that level. Otherwise, the only reason I'm a tad bearish is because I wouldn't expect the market to do too much ahead of Fed reserves, because they could chuck a spanner in the works. Imagine if they come out and said, no, we're happy with interest rates where they are. There's no rate cut. I would expect the US to get really knocked around on the downside. But then again, they're not raising rates because it's a weak economy. They're not raising rates, not cutting rates, because they're trying to buoy the economy. It's actually doing okay. So that's the reasoning behind it, which you would think the equities should do okay. and the yield curve wouldn't be inverted. But the way it's been going, they tend to find they want the market at these levels wants stimulus, and if they don't give it to them, there could be a sell-off. Anyway, we'll see how we go. Thanks for joining me, guys. We'll speak to you hopefully again tomorrow. Cheers, bye.